Okay. So we'll start from what is risk. Okay. So the portions are introduction to risk. I think I went through that the other day. Introduction to risk analysis. We are going to discuss what are all the components of risk, and insurance is risk. What is the insurance and risk? What is the link? Risk analysis process. How does it work? Legal principles. Insurance as a contract. Legal liability. And then how an individual is exposed to risk. What kind of risk he is exposed to, that we will analyze. Personal property and liability insurance, and then life insurance need analysis. In this only human life approach, need approach and capital need analysis. That is what these three approaches. Two we have seen. The last one I told you I'll explain when we are going there. Okay. Then life insurance policy types of available products in India we'll discuss, and then policy selection. How do you select? Okay. Cost comparison method, return on savings component, and all that we'll compare. And then annuities. Annuities are pension products. So different types of annuities we'll discuss. This annuity portion comes both in risk analysis and also retirement planning. Medical insurance we'll have, that is Mediclaim, we'll discuss in detail. Insurance of business risk, partnership and keyman insurance. And then how you can understand the client's insurance, available insurance, what to suggest, whether you should say surrender this policy or you have to close the policy, how you have to suggest them. So that we are discussing. And then government regulations, Insurance Act, IRDA and all, little bit we'll see to it. And then insurance pricing, how the premium is charged. Some of the portions I might be covering at a different point. This is what is the syllabus from FPSB board. Okay. I have given in the order in which they have given, but insurance pricing I may take it early, because when we are considering law of large numbers, I will take the insurance pricing there itself. Then types of insurers, who are all the people involved in insurance, providing insurance to public. So we can talk about brokers, advisors, and then insurance companies, reinsurance. Okay, all those things. So this is what is the complete portion. I can say around 18 chapters are there. Imagine how many chapters we can cover as quickly as possible, because most of the things are uh, theory portions in insurance, but your examination questions, around 50% is theory, 50% is calculation. Okay, so when I say 50% calculation, means it includes the time value of money, which is from the first module portion. Okay, insurance will have, as we have seen, human life value, and then maturity amount, and then surrender value, or sometimes death claim, what is the amount that is settled, and then there are certain deductibles in case of general insurance, what is payable. Okay, all those things are covered. Now, what is risk? The word risk, what is the meaning of that? Okay, the chance of future loss that can be foreseen. So risk, when I say risk, what does it mean is, okay, there is a possibility of loss, which I am afraid of, correct? So it is foreseen. I know that there is a possibility of loss, but do I know when it is going to happen? I don't know, right? So when, how, what, all those things are not known to me, but only thing what is known is there is a possibility of loss. Okay, so risk is the possibility of loss. Risk has got different definitions. One more questions might come. Uncertainty about financial loss from an exposure. That is also risk. Okay. Uncertainty about an outcome, and that outcome is unfavorable. You buy a lottery ticket. Fine, Davneet. If you are leaving, fine, you can look into the recordings. Fine. So uncertainty about an outcome and that outcome is unfavorable means I told you, you buy a lottery ticket. What is that outcome possible? In case of a lottery ticket, you can get a fortune, right? You can get a big fortune, that is a possibility. What is the other possibility? You may lose the amount what you have invested. Correct? Is it a risk? It's not a big risk. We don't call it as a risk because the amount which you are losing is negligible, but you are going to get outcome could be a fortune which is huge. So it is not a risk according to our risk analysis. Okay. The outcome should be unfavorable and the outcome should be huge. Then only we call it as a risk. Chance or possibility of loss or damage. When I say damage, yes, if you consider a life of a person, damage means losing one limb, this, that, and all that, becoming blind, physically handicapped, all those things, or incurring medical expenses, all those things are considered to be damage. Loss means losing the life. If you consider property, losing the property due to fire or natural calamity or any kind of uh, attack or anything. So, chance or possibility of loss or damage is called as risk. End effect of risk is loss. That is what you need to understand. What is the end effect of risk? If I say there is a risk, there will be a loss. Then only I call it as risk. If there is no loss, it is not considered as risk. Forms of losses. Losses are of two forms. What are all the forms? Precipitated losses, loss exposure. Okay, we call it as direct and indirect. Okay, what is precipitated loss? It is a direct loss. Losses that has occurred. It has happened. Occurred means happened. Loss of a property due to fire or any other peril. Okay, so what happens is there is a fire. Okay, the house got burnt fully or partially or whatever. Imagine it's fully burnt. So what did you lose? You have lost the property, the house property. So that is a direct loss which is considered as a precipitated loss. Okay. Then loss exposure is an indirect loss or that losses in the future. What are they? Losses that may happen. In the case of the house property, what I need to imagine is the house is gone means you have to live in a rented house. So you might be incurring a rental expenditure. So that is your loss exposure. Got it? So that is called as a future loss or indirect loss. So precipitated and direct losses, the house property as a property is gone. It's an asset which is an economic loss. Whereas a loss exposure is the future losses that may happen. So it is until I have to reconstruct the house. So I have to spend money on that. That expense of reconstruction is my future loss. Same way, until the house is ready, I may have to live in a rented house. So rental expenditure is there. That is going to be my loss exposure or future loss. Got it? Same way, if somebody dies, precipitated losses, immediate income is lost. Then the second one is loss exposure is future income to the family is lost. Correct? So these two are the forms of losses. Now let us understand what is an asset. We call asset A-S-S-E-T. What is the meaning of that? What is an asset? An asset is something which has got an economic value. This is what is the definition. If you have attended IRDA classes, you would be knowing, isn't it? Isn't it? What is an asset? Asset is something which has got an economic value. Asset is something which has got a lifespan. What is a lifespan? Lifespan is the period for which It is available for you, giving it services. It's giving you the benefits. So that is what is called as the lifespan of the asset. A human life is an asset. So what is the lifespan of a human life is till his longevity. Correct?
Ma'am,
Yeah.
ma'am, are you showing that asset slide?
No, there is no asset slide.
Oh,
I'll
okay,
just
okay.
explain. Because it is directly, it has gone to peril. So there is no asset slide. I am just explaining. Probably from the next class, I may have to include that. Okay. So an asset. So I told you there are 2-3 things. Let me see whether there is one column. No. So probably let's include right now whatever points I'm covering. Let me include it as one slide over here. You will also be seeing this. Correct? When I am providing you the PPT, you will be seeing the same thing. So what is an asset? So what I told you as an asset, a thing having
Economic loss.
economic value.
Sorry, economic value.
Only when it is a risk, it becomes an economic loss. Okay. So a thing having economic value. Also, I need to say, hello, you're there?
Yes, ma'am.
Suddenly it stopped. That's all. A thing having a lifespan. So a lifespan is the period. What is a lifespan? I'll just explain. Lifespan is the period available for the asset to provide the benefits. That is, this is the period in which you can enjoy the benefits of the asset. Correct? You buy a car. What is the lifespan of the car? It all depends upon your maintenance, the way you use it, the way you give it for service, and then the way you drive. Right? So it has got, but still it has got a particular lifespan. So during which time it will give excellent service to you, support to you, benefit to you, comfort to you. But at the same time, once that period is over, you know very well, okay, after 10 years or 15 years or 20 years, you may be losing this asset because it will become a scrap. Correct? Either you can resell it or you may get any value or you may not get a huge value. So you understand very clearly that every asset has got a lifespan in which it is available to provide the benefits. Even it applies to human life also. In case of a human life, generally which is the period? I told you till longevity. Is it so? Can anybody correct me there? What is the lifespan of human life?
Till he retires.
Wonderful. So, when we consider the economic value of a human life, we have to consider only to retirement. We cannot go till the end of the life because the person may not be gainfully employed post retirement period. When I say retirement, it is not from only one job. Probably after the regular job, he may take up some extra job and work and earn until he is earning. That is what is the period of his lifespan under this calculation, considering him as an asset. Because once the lifespan of earning is over, then he becomes a liability. As long as he doesn't earn, he is a liability, right? So, we'll discuss that during retirement or during pension products. Okay, so lifespan is the period available for the asset to provide the benefits. So, anything else you want to give here as a condition of an asset? Assets are perishable. What is perishable? Assets can perish or it can lose its capacity to provide the benefits. Correct? It can become old. You construct a house which is say 50 years old. Sometimes it requires repair. Correct? That is again another feature of an asset. Then assets are exposed to perils. Perishable, okay. So assets are exposed to perils. What is a peril? What is the meaning of a peril? So that is what we started seeing in the next slide. Okay. Assets are exposed to peril, or even I can say attacked by perils. Okay. Hence, assets are exposed to risk. Correct? So there is a risk to the asset, which is risk to the owner of the asset. Correct? So this is what you need to understand from an asset. So when I say asset, an asset should have an economic value and then it will have a lifespan. So what is a lifespan is the period it is available for the owner of the asset to get the benefits out of it. And assets can perish by, you own a cow, that is an asset. It is giving the milk and you're supplying the milk to people, and then what happens after some time? Cow can die, or it will lose its capacity to produce milk. So this is what is called as the perishable thing. Okay, a tree which is giving the fruits, it stops. So these are all the things. So it is perishable, and then assets are exposed to perils. That is, peril is something which is from outside, so that can attack the asset, and perils cause risk to the asset. Okay, so what is a peril? Now everybody is clear about assets. I am going to peril. A peril is the cause for risk, cause of the loss. Can anybody give me an example of a peril? Any asset you take it, give an example of a peril. One by one.
Fire.
Inflation.
That is too high a terminology. Just give a simple example. Harita, what you said?
Fire for the house.
Fire for the house. Okay, good. Then anybody else? Anything else? For human life?
Cause of a risk.
Madam, accident for loss of life.
Yeah, correct. Loss of life. Okay. I'm just asking you for the example for peril. The right example is fire. Anybody else can give me an example for peril. See, you are talking about what risk can happen. You are talking about an outcome. I want you to give me the thing that is responsible for the cause of the loss.
Calamities.
Pardon?
Natural calamities.
Natural calamities. Okay. Good. Yes. Give me an example. Flood. Right? Flood, tsunami, or some kind of natural calamity. Beautiful. Peril can be sickness. What is happening? For an individual, peril can be sickness, accidents, right? These are all perils. I want you to differentiate between the risk, the loss, and the peril. Okay, they may give you a question. Which of the following is a peril? They give all the death, fire, all this. You should be able to pick what is a peril. Peril is the cause for the loss. Peril is not the loss. Peril is the cause for loss. So peril is the thing which causes, which creates risk, which is responsible for the loss, which is attacking the asset. So just imagine asset is the house. What can happen? As you said, natural calamity, fire. Correct? Those are all the perils. For a human life, sickness is a peril. Accident is a peril. What is the end loss? Death is the end loss. Physical disability is the end loss. But the peril is the thing which is responsible for the loss or which causes the loss. So kindly differentiate between the peril and the loss. Okay. I'm not bringing in inflation over here. Okay. In risk analysis, we are not talking about inflation. We'll talk about it much later. So right now, let us understand the risk to the human life, the risk to the assets of the human. So assets are like, yeah, financial asset is also there. Okay. But we are discussing about the simple ones. We'll discuss about inflation because it is a little different, a little deviation from this. Okay. So hazard. What is hazard?
Ma'am, you said death is not a peril, is it?
Death is a risk or a peril.
I thought it depends on whose loss it is. Let's say for a family,
Yeah, okay.
the breadwinner's death is a peril.
Right, you're right. Death is a peril or risk. I asked the question.
Madam, loss of income is a loss, right? But death could be peril for loss of income. So death is a peril for loss of income.
Now, I will go back to, is death a risk or not? Yeah. Kindly reduce the volume. I mean, you mute your. Yeah. See, the question is, I'll explain to you. What is risk? Yes, you are right. Death is a peril. Absolutely correct. Death is a peril because it is causing a loss of income to the family. Absolutely correct. We like sickness. Death is also a peril. Now we'll discuss about risk. Death is a risk or not? What is a risk?
It is a risk, madam. Death is a risk.
What is a risk is uncertainty. Now, I'll give you three things. You tell me which is risk. Which is risk, which is not. Okay? With regard to human life, you have three options. Death, old age, sickness. Out of the three, which is risk or which is not?
Sir, can you repeat the question?
I have given you three options. Tell me which creates risk out of the three options. That is death and old age and sickness.
Sickness is a risk.
Okay.
Old age is not an uncertainty, it is a certainty. What I see. Death is uncertain, sickness is uncertain. Both are risks.
How death is uncertain? Death is certain.
Sorry,
Can you
the
say
death is certain, but the sickness is a.
Remember, we don't know when the death occurs, so it is uncertain.
Super. Yes, Shubhashini. So, the time and manner in which it is happening is uncertain. That's why death is also a risk. So, death is also a peril and a risk. Okay, fine. Now, the other one, old age. Old age is not a risk. Old age is risk or not?
It's a risk. Old age is also a risk.
Is it uncertain or certain?
That is certain, ma'am.
Certain. Everybody agrees that old age is certain.
Yeah.
Anybody differs? I differ in this.
I also differ.
Yeah, tell me, Girish, right? Girish or Nagesh?
No, this is Vikram.
Vikram, yeah, tell me Vikram, how old age is uncertain? Definitely, right? What is a guarantee?
What is the guarantee? That's what, I was thinking that I may not even attain old age. That's what it is.
That's
Depends
it,
on what is the old.
right. So what is old? First question. What do you consider as old age? That is, we consider post-retirement. That is, when I am not earning anything. And okay. So what is the guarantee that I'll survive till my retirement age?
Correct.
So old age is also uncertain. All the three are uncertain in some way or other. We don't know when it will happen, whether it will happen. Yes, death
Only death is certain, actually.
death is something which will happen, but only thing is there also there is an uncertainty about whether it will happen in which place, which time, when all those things are. Yeah, there is an uncertainty. And sickness and what do you call the old age? There is no uncertainty because I don't know whether it will come. I may not have any sickness at all, isn't it? So where is the guarantee? In fact, sickness definitely has to come. We can't say that. So a person without being sick also can die. So that's the reason there is uncertainty. Whenever there is an uncertainty associated with that particular thing, then it is called as there is a risk. Okay. Now differentiating between
Question. Isn't risk and peril very similar?
I'm coming over there. So I said there is a risk. So when there is a risk, I didn't say that this is the risk. What I said is this creates risk. So all these three things which I am talking about are perils, except death is a risk and a peril. Okay. Sickness is a peril because it causes expenses. And it is responsible, isn't it? It is the peril which is creating an expense to me, which is a loss. Same way, old age is a peril because of old age, if I am not earning, it is creating a loss to my family because they have to take care of me. So that is again a risk. So a thing which is creating the risk is called as a peril. The thing that is responsible for the loss is called as a peril. So kindly differentiate that peril is the cause for the loss. Okay, that's it. You have lot of thoughts on this, and then get back to me with your doubts, which is peril, which is risk. We'll go to hazard now. So a hazard is what? A hazard is a condition that increases or creates the probability of loss. So what is a hazard? Hazard is a situation. Hazard is something which creates sometimes the losses, probability of losses, or it is increasing the probability of losses. It is not the only thing that is directly responsible for the loss. It is creating or increasing the possibility of losses. Can anybody give me example of hazard? We hear these terms on a daily life, right? Yeah,
Pollution is a hazard, right?
beautiful.
Which
Okay.
will. So basically, hazard is actually create the probability of peril.
Right, absolutely, yes. Increases or creates the
Accident.
probability. Yeah. Accident is the direct peril. Accident
Accident
is
is a
not.
risk.
Pardon?
Rash driving is a hazard.
Right, absolutely right. You are getting the point now. Anything else? Yeah.
Not wearing a seat belt while driving.
Okay, true. Good. Any other thing? Human life, what is hazard? Bad habits. Right. Smoking or drinking, which is a bad habit, which is health hazard, which is called hazardous, right? So,
Ma'am,
yeah.
ma'am, is death is a peril and a risk.
Hmm.
Sickness is a peril. Old age is what?
Peril.
But it's not causing any loss, no, ma'am.
How can you say that? If I'm not earning, I am a burden to my family, right? At the old age. Imagine somebody who is living in the family up to the age of 90 without any earnings. Just imagine what will happen.
Yes, ma'am, got it.
Family will feel that they are fortunate. In many families, it doesn't happen. That's why old age homes are many. Nowadays, it is an increase. Okay. Now, hazard people have forgotten about, as rash driving is right, working in the chemical factory. Your occupation may be a hazard. If you are working as a pilot, if you are working as a bus driver or anything, correct? And then hazard could be because of the physical disability, right? Somebody might be blind. A person with proper eyesight crossing the road and a person who is blind crossing the road, there is an increased possibility, right? That's why we say it increases the probability of losses. That's why hazard is a condition or a situation which creates or increases the probability of losses. Okay, probably hazard helps the peril. It creates the peril or it helps the peril. Okay. Now we'll see which are all the hazards. There are different types of hazards. Physical hazard. Physical hazard is a condition that increases the chance of a loss. Just now I gave an example of a blind person, handicapped person crossing the road, getting into the bus or anything. So the possibility of loss is higher. So that is a hazard. Moral hazard. Moral hazard is dishonesty or character defects in an individual that increases the frequency or severity of losses. Any example?
Drinking.
Moral hazard. That I am considering as habit, okay? Okay. Yeah. I don't know whether I should consider under moral hazard. Just imagine a situation in a bank. Dishonesty in the cashier. That may increase, that increases the possibility of losses to the business. Correct? So, a moral hazard is the behavioral or not even behavioral, the actual character of an individual which creates the possibility of losses, which increases the possibility of losses. Okay. Somebody might see, we have seen a lot of movies with regard to this insurance policies. Do you remember? There are a couple of movies in Hindi. I remember there was a movie called Race, where I'm not advertising for any movies here. Okay. So where what will happen is like the person would have taken a huge policy on in his name. In fact, he will not take. The wife will insist, the spouse will insist, and then because that policy was there to get the policy money, that guy will be killed or he will be assumed to be killed. Some kind of a situation will be created so that that certificate will be produced and they get the death benefit and all that. I don't exactly remember the situation, but this is something like example for moral hazard. In fact, if you have worked in an insurance company, they verify a good lot of things with regard to the proposal form. When somebody submits a proposal form, they verify whether this proposer is really interested in taking insurance or he is having a kind of different idea. Because what will happen is, yeah?
Insurable interest.
Yes, insurable interest is one point which many people may not be knowing right now, because I am yet to discuss that. Only the person from insurance background can understand what is insurable interest. So what I am trying to say here is 2 points. One is, if I am looking for an insurance coverage for a bigger amount, which is not in any connection with my income earning capacity, then they will get a doubt. That's why there is a financial underwriting which is done to understand whether my earnings and my sum assured requirement are matching. That is one thing. Secondly, if I am suddenly looking for a policy and pressurizing them to give the policy faster, then they'll get a doubt whether I have any sickness. That's why I want this policy to be done. Or I have any idea of committing suicide. That's why they have a suicide class which is for 1 year. Some companies have even 2 year suicide class. Because within that period, if the person is planning to commit, creating a huge amount as sum assured coverage so that the family will get the benefit. So that is one thing which they verify for moral hazard. There is another point which they verify is, suppose an individual takes a policy in the name of the spouse, wherein the spouse is not earning and individual is a proposer and spouse is non-earning spouse. If the sum assured is much higher, they get a doubt whether there is a possibility of something like a dowry death or anything. Nowadays, those words are not being used. Generally, what they suspect is there is a possibility that, his intentions are not correct. Okay. So, generally, if the husband is taking in the wife's name policy, they will immediately verify what is the husband's insurance. Suppose husband is covered for say 50 lakhs, the wife will also be given only to that extent. They will not be given higher than the husband's insurance. So this is what some kind of a verification. I don't know in what way it avoids the moral hazard, but they have these conditions. So moral hazard is dishonesty or character defects in an individual that increases the possibility or frequency or severity of losses. What is frequency is probability. How many times if there is a possibility it has happened. And then severity means the volume of loss. Okay. So this is what is moral hazard. I want you to be very clear about moral so that the next one what we are talking about is the moral hazard. What is the moral hazard is? Moral means what? It is carelessness. Moral hazard. Okay. A slight difference in the spelling. Moral and moral. Okay. So what is moral hazard is? It is not that there is a character defect. Actually, it is carelessness. They don't care about the society or anything. So a person, I always give this example, a person has insured his house and the household articles in the house. So they are leaving for a movie where the whole family is going. After going few yards, then his daughter is telling, "Oh Papa, we forgot to lock the door." Then father is telling, "No, don't worry. The whole house is insured. Anyway, our TV and refrigerator are old. They'll compensate for the new one." It's good, right? So this is what is called as carelessness or indifferent to losses. So they don't care. Is it the right thing, right behavior? So this is called as a behavior defect. It is not the character defect. So this behavioral defects are coming under moral hazard. Okay. Hope you are able to differentiate between moral and moral. Okay. So the next one is legal hazard. What is legal hazard is? Characteristics of a legal system or regulatory environment that increases the severity of losses. So what is the meaning of this? Suppose somebody is riding in the highway. They hit a person. Okay. They just go away. They just hit and run. They will not care, because if they stop the vehicle, some villagers will come and it will become a big case. They want to avoid that. Anyway, immediately nobody was around. They just rushed and went off. The reason is what? The reason behind that is two things they know. One is, if they stop their car and attend to that case, then what will happen is they have to go to the court, run behind the things, and then it is a big headache for them. Second thing is, they know that, okay, this hit and run case, there is a compensation which is given. Anyway, it's not in my hands right now. There is a possibility that there is a compensation which is paid by the government. The government or insurance companies put together, we are going to study what it is. There is a fund that is created out of which it will be paid. So because they have an idea about these legal aspects, they just don't care. So this kind of situations create more possibility of losses. So that is what is called as legal hazard. Okay, legal systems, the characteristics of the legal system create. Many a times we can give an example of even a person appointing an advocate, and then the advocate argues in such a way that he is demanding for a higher compensation than it is actually required. Okay, so in such cases the legal system is responsible, right? Sometimes it creates the possibility. So that is what is called as legal hazard. And then there is one more hazard which I would like to include here, which is called as occupational hazard. Okay, I don't know how it has missed out. I think somewhere else we have mentioned that occupational hazard. So what is occupational hazard is the kind of occupation creates hazard. What is that kind of occupation? I gave some example of a pilot, isn't it? Air pilot, when he is working, he is exposed to hazard because there is a possibility of loss to his life. So there is a possibility of accident. So that is what is occupational hazard. But in occupational hazard, under that there are two possibilities. One is direct exposure, another one is indirect. For example, a person who is a driver or who is a pilot and all that, they are directly exposed. Whereas there is another hazard wherein a person working in a chemical factory is exposed to a hazard. That hazard is occupational hazard, which will affect his internal system and gradually affect that. So that is another occupational hazard. Okay, so I think with this we'll close today's class.